Hi, we are back again. Maybe you're seeing a lot of us, but that's good. That's our objective. Um, Avi, there's so much happening on the ground, and very recently we've had the announcement of tariffs made by the US President on 2nd February. We're on the 4th today. We wanted to know what is the highlight that you would like to bring to the audience watching this.
Sure. On the 2nd of Feb, the US President announced that the tariff burden on Indian companies has been reduced from 50%, which was 25% reciprocal plus 25 linked to our Russian oil purchases. That's now been dropped to an effective of 18% in total. So the 25% on the Russian oil purchases has been called off, and the 25% reciprocal has been dropped now to 18%. I'd say it's a good move.
Yeah.
It is our 18% now makes us far more competitive with a lot of the countries, for example, like China, Vietnam, Brazil, Thailand, South Africa, all have higher tariffs compared to India. And that makes us competitively a bit stronger, especially for our exports in certain sectors.
Right. And what does the trade deal mean for India?
So in practical sense, the US accounts for about 20% of our goods exported, which is a little over $86.5 billion. While as a percentage of GDP, that's pretty small for India at 2.2%. But as a percentage of the export bucket, it is a relatively healthy percent at 20, right? A lot of these are now going to be dropping in terms of the tariffs, and therefore that makes it a lot more attractive for Indian exporters to go back into the US. If you look at exports, they've definitely kind of come off since September, which was when the tariffs first started. That should start to reverse itself. Now we are still waiting for the final signature on this trade agreement.
Yes.
And we're still waiting for that. So until the I's have been dotted and the T's have been crossed,
Yes.
we're hoping that there's not much change, but at least broad strokes this should help.
Yes.
Now in terms of labor intensive sectors, right, like textiles, marine products, gems and jewelry, that's where we had the greatest risk of losing out to competitive or our neighboring countries. That risk has been mitigated to a great extent. And at the same time, I think it has helped that we signed a really important trade agreement with the European Union. And that definitely helped in our negotiation stance.
Absolutely. Yes. And what does this mean for the Indian equities?
So the Indian equity markets definitely have been, I'd say that 50% tariff definitely spooked the Indian equities. 2025 was a pretty muted year for Indian equities in general. But having said that, I do think from a sentiment perspective, it is definitely a boost. Now, it remains to be seen how that actually plays out in terms of the numbers and how quickly can we get the exports moving. But sentiment definitely has improved, right? Now, what does that mean? Are we going to start to see more foreign investors start to come in? I think the big driver for the Indian market continues to be earnings growth.
Right.
And unless and until we see a recovery in our earnings growth, so we're expecting anywhere from 10 to 11% for the next year, and then an acceleration thereafter. So till we see that earnings growth accelerate, I think participation from the foreign investors is going to be muted, because if I look at that relatively muted earnings growth, then our valuations do look a bit expensive.
Right.
But as soon as that earnings growth starts to expand and accelerate, the valuations do not look so expensive.
Right. Well, I'm learning so much from you on this drive, Avi. Thank you for watching. Please feel free to write into us with any clarifications, doubts you have on this topic or any other. Our job is to think global, act local. We're a global fund house, but right at your doorstep, wanting to address any doubts and clarifications you may have on this topic. Please feel free to write to us in the comments section below. Thank you for watching.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.